Yes, it's Salah Nasri here, and yes, I have a special announcement. The Game of Chip has just hit 20,000 orders on Amazon. Thank you to everyone who placed the order. The book was just released in December, so I'm very, very grateful and surprised to date. If you are someone who is intrigued, curious about how the semiconductor ecosystem works from beginning to where we are right now, this book was written with you in mind. So order it, read it, and it is pretty much a handbook of the whole ecosystem. In the meantime, enjoy the next episode and don't forget to hit that subscribe button. What's one thing 20 years in R&D taught you that made you a better investor?
Trust the process.
How much of your decision, from a percentage standpoint of view, 0 to 100%, is gut instincts?
Oh, well, 100%.
Our guest today is Owen Lozman, co-founder and managing partner of 55 North, a dedicated quantum technology venture fund headquartered in Copenhagen.
A chemist by training, he holds a PhD in physical organic chemistry from the University of Leeds and spent more than 20 years in corporate R&D before turning to venture capital.
He now works at the seam between the semiconductor industry and the emerging world of quantum.
Why did you guys decide just to focus on quantum?
If you got two products, you've got like a modulator and you can use it for a data center, that way you can use it for quantum. Where are you going to spend your money? So of course you are, because you could send billions of them tomorrow.
Which part represents the most interesting investment opportunities?
It's a bit why the industry isn't further along, because we have the technology around us. It's just not accessible because we don't have the scale in which to make that economically attractive for the producers. You need to have an application which shows scale, but you need to have to put the faith in to build the scale in order to get to the point where the application is useful.
What lessons could you share with us that have made you a smarter investor?
If you're in VC, if you're not failing, then you're probably not trying hard enough. If there is a threat, then you're probably going to not see them in the incubators. It's probably going to get dissipated somewhere.
Hello and welcome back to the Semiconductor Leadership Podcast. I'm your host, Salah Nasri. And yes, whether you're a semiconductor veteran or someone who's curious about semiconductor manufacturing, this is your podcast. We're going to be covering quantum today. And it is with great pleasure that I have Dr. Owen Lozman, managing partner of 55 North, joining us. It is the world's largest dedicated quantum technology capital venture fund headquartered in Copenhagen, with a 300 million euro fund focused on quantum computing. He's a deep tech seasoned investor and scientist, and he brings over 20 years of R&D leadership and more than 7 years, I was going to say 70 years there, Owen, of venture capital expertise. Holds a PhD in physical organic chemistry from the University of Leeds and is a fellow of the Royal Society of Chemistry. Owen, great to have you on the show.
Hello, good morning.
It's great. Absolute pleasure to have you here. Owen, I want to do a rapid fire round. I want to get the people in the audience get to know you. Okay. And if you can answer short, quick, one answer questions. So, quantum computing, sensing, or communication, if you could back one, which is it?
Computing.
Ooh. Copenhagen or London?
Copenhagen.
One book every deep tech investor who came from the lab should read.
Innovator's Dilemma.
NISQ error or fault tolerant quantum, which is more investable right now?
Both.
The app on your iPhone you couldn't live without.
Perplexity.
Coffee or something stronger after a founder pictures you quantum supremacy in a lift?
Stronger.
In one word, how would a founder you've back describe your style as an investor?
Impatient.
Biggest myth about what quantum computing can deliver commercially right now?
Oh, in one word, anything?
Anything? That's not fair. If you weren't in quantum venture, what would you be doing?
Semiconductors.
What's one thing 20 years in R&D taught you that made you a better investor?
Oh, trust the process.
All right, that's the rapid fire. I don't know. Everyone gets a taste of Owen a little bit. Let's get a bit deeper. So look, you've had a remarkable journey, right? Coming out of the University of Leeds, and then at Fujifilm and Merck.
Yeah.
Then you building M Ventures into one of Europe's most respected deep tech corporate VC arms. And now 55 North.
Yeah.
Well, can you give us a 1 minute or 60-second version of how you got there or got here?
Yeah, well, I mean, it's an elaborate series of mistakes, I guess, right? But I think it's about. Well, we may come to this a little bit. We'll talk about investing as well. But I think if you think if you're good, if you get too embodied in what you've done rather than how to do it, you end up stuck in these very like niche areas. I think what I've done is always, I've always taken what I've learned in something to transfer it to something else. I'm not too bothered about the thing I was working on, but the way I was working on it helped me to do the next thing. So, it was always serendipitous. I was always working with great people, trying to follow, my passion. And it just led me through this journey of like, from, academic research to industrial research, and then thinking more about how do you make this into businesses and where can you have the most impact, right? And I've done that to say no, I guess.
And if you could give us a brief outline on 55 North, I mean, where does that come from? Well, why 55?
Oh, the 55 is very difficult to come up with the name of a VC fund that's quantum without having a Q in it, because we wanted to avoid the Q.
Yeah.
And we deliberated along. This was a long. Probably we spent more time on this initially as a team than we did anything else, trying to come up with a good name. But we wanted something that, I mean, the number has some deeper resonance in quantum, like if you round up or down, but you have to be marketable. And it's actually the latitude of Copenhagen. So we wanted to give a little bit of a nod to where we came from, but have something which was kind of unique and recognizable. So yeah, it's all names are hard to come up with, right?
I've heard of a company called Alice and Bob. Yeah, that's a cool name.
You can explain where that comes from. It's to do with names of qubits.
Correct. Yeah. What's interesting is like you made a deliberate transition, evidently, from R&D leadership at Merck into managing M Ventures.
Yeah.
What drove that decision?
Yeah, well, I mean, I've worked in corporate, so I worked in academia. I went to industry primarily because the work I was doing in academia, seemed to be quite useful, but nobody seemed to be bothered about making any use of it. And I wanted to work on things that would end up in having an impact on people, right? So products that people would buy or things that people could use to do something useful with. So moving to industry was, I think the first step, right? Moving into something more, bit more commercial. Think about why did I end up taking that transition? Because I wanted to do something more entrepreneurial. I've been in corporate for 20 odd years. I'd see how these businesses grow. I'd worked in very mature businesses, very early stage businesses. But the translation piece was the most exciting thing for me. Is that taking that idea from research or, an idea of a product that you can go and build and then trying to connect that to the technology. Was kind of more exciting than, just sort of running projects and things like that. The other thing is, when you're working in corporate, you have the timelines for projects can be very long or very short. It depends on leadership. It depends on markets. But you're usually working on an annual budget, and it can take like a year to get the budget to do something. So that delays you starting an experiment for like 18 months, something like this, right? And then decisions are made not necessarily on the value of the technology or the value of the market, but just like arbitrarily. And, with venture, you're much more linking to these milestones. You're linking to where you can get the next funding round. But you get usually enough money to get to a value inflection. So it's a bit more mature in the way that you do the research, and it means you can deploy the resources quickly enough to make the right decisions. But you're also not tied to annual budgets. You're tied to, hitting value inflections that you can then go to raise more money off of. So the dynamics of how that works in terms of how you translate early technology, to me, seem more effective than a lot of what you do in corporate at that very early stage. Corporate's very good for developing something. It's not very good for inventing something, typically.
So what's interesting is that, at M Ventures, you built a portfolio of more than 25 deep tech startups across quantum, semiconductors, materials, and AI over the 7 years. I mean, what would you say was the experience that taught you about evaluating frontier technologies when science isn't generally uncertain.
Yeah. I mean, well, typically as a VC, we try not to invest in science risk as much as possible. In quantum, that's maybe, there's maybe a little bit less. That's a bit less so in some cases, but from a VC point of view, you really want to invest in engineering risk of commercial, like financial risk. You don't really take market or scientific risk if you can help it, right? You normally want to know that does the thing work and is there a market for it, at least from a scientific level. But I think what it taught us was that you need to know. I mean, working with fantastic people was the most important thing. People that were really passionate and would want to spend the time to get to know the ecosystem and the people in it. Because there's that network that made us successful at the end of the day. It was the team and their individual contacts and the connections they had, which helped to understand what are people looking for and what does it need to do in order for it to be valuable to these other companies, which is effectively your buyer, right? So it's about trying to understand, like, okay, is the team and the technology capable? Could success be one of the outcomes? And if it is there somebody willing to pick it up and are they going to want to pay sufficient of price to make it worthwhile, the risk that you put in? So, understanding the industry is the most critically important thing that you want to do as a VC, which is why I think Ventures was successful, because we kind of picked a layer. We picked semiconductor. We were a materials company, Merck, the company that was the parent. But we weren't really investing necessarily in materials, so we weren't really competing. We weren't really a strategic threat to any of the companies we were investing in, and it meant that we could really, establish a strong position across the whole ecosystem. I think that was very valuable. It's harder as a generalist investor if you don't have that intimate knowledge of the industry, or you are just kind of picking winners. It's harder to pick winners when you don't know exactly what a winner looks like, right? So.
I mean, it's interesting when you talk about winners, right? I mean, well, I think one of the biggest ones you've done within Ventures was Celestial AI.
Yeah.
I mean, how did you come on? I mean, how did that come across? Or could you share with us the story of how it?
Well, it's a serendipitous thing, like all things, right? Merck bought Intermolecular, which the founder Dave Lazovsky, founder of Celestial, had set up. And I think Dave wanted to, when he was setting up Celestial, it wasn't called Celestial AI when we invested, it was called Inorganic Intelligence. And Dave had a grand idea of what he was going to do, and he was looking to try and work with Merck and get some IP. We just sat down and we talked about it, and from there it went into what it was. But we didn't really understand the technology. We were trying to figure it out as we went. The team, especially Christian, who did the work, on the deal. It was a lot of work to understand it, but the investment in the end was in Dave, and so.
Would you say that was your biggest win to date?
Well, so far, I think there's other. I mean, that's financially the one that was probably the biggest so far. I mean, for a deep tech portfolio, it was 7 years old. It was still not mature by any stretch of the imagination. SEEK, a quantum investment that we did very early in the fund life, the Daniel Franke, they're also going to go public this year. So but that was from a very early stage technology, very very completely different characteristics. I mean, we still invested in the team, John and Oleg and the team, but it was about really that was a technology risk effectively, and a market risk, because we didn't know whether quantum was going to get to the point where that was necessary. But again, huge success from a different perspective. But I think every one of those companies we learned something. It's about asking which is your favorite child or something, right?
Yeah.
So every single one of them, the founders are amazing. We've done great things together. We've supported them, they've supported us. And irrespective of whether it was software, hardware, just the experiences you have working with amazing people like that is what makes this job so amazing at the end of the day.
As you might know, I wrote a book last year about the ecosystem of semiconductors. And I struggled to find an analogy that actually can fit how the industry works. So it was just out of the blue. First of all, the book was orientated around Game of Thrones, and I realized I was like, you know what? Not many people understand Game of Thrones. Then I switched the book into chess. I was like, yeah, this is actually quite strategic. But then I was just like, that still doesn't fit right. And I think, I was at CES, and I was walking down the casino, and I was just watching poker being played. I was like, there is nothing better than comparing semiconductors to a poker game, or what you're in is betting at the end of the day, theoretically, to an extent. Like, you know, you're going to raise on a good hand that you've got, or you're going to fold based on the situation.
Yeah, that's fail. I guess that's a good analogy. It's fail fast and put your money after the things that are proceeding.
Yeah. And, you know, one of the key parts in poker is knowing when to fold early, or unfortunately folding when your pot's too big and you lose a lot. I want to talk about your folding. I know nobody likes to talk about the bad parts of investing. Everyone
Well, it's not the best.
shows the highlights of, like, yeah, I did this big deal and that deal. The question is, have you folded?
Yeah, we have. Yeah, of course we have. But I mean, and it's hard. They're the hardest decisions you make, because, you know, it doesn't change your love of the technology, the people, or whatever else. But if the company's not performing, if it's not raising, you know, I mean, that's the key metrics. The only thing that really matters. Are you able to are you able to convince the next investors that what you've done in the meantime, since the last amount of money you got in, is worth more money? And, you know, so that's effectively what you're doing. And yeah, if companies not able to raise, then it's difficult, right? But then even in those situations, right, if you do it in the right way with integrity, you support the company, you know, even through liquidations or whatever, you know, you go with the company through that, you make sure that the employees get what they deserve, and they're treated fairly, and that the board's doing everything at the right level. I mean, it's still a job that you have to do. And if you're in private equity, that's probably not a good thing, right? If you're in VC, if you're not failing, then you're probably not trying hard enough. I mean, it's a power law, and we don't know. Like, there's 10 companies doing the same thing. You try and pick the one that you think is the best, but, you know, you don't know, and there's some close consolidation, etc., etc. And even then, it's not necessarily based on the technology or the people or anything. It could be, you know, COVID or markets, or suddenly all the Chinese investment is in a critical technology disappears. Or, you know, there are many, many factors in which can influence the death of a company. But I think putting good money after bad, like, you know, knowing that things are not going well and then bridging and things like that, they're very, I'm very proud of the fact that we didn't do that. So even though that's often the hard decision, especially when, for example, you know, it's not your money, right? So
I mean, from the lessons that you learned from the folding part, what lessons could you share with us that have made you a smarter investor? Oh, I want to say,
well, I'm not smart. I'm not a smart investor. I'm learning.
But yeah, you're learning. But I would say, what would you say? I think that's the wrong term, too smart. But let's say, what did you learn that helps you now to mitigate the next risk that you go into places? I mean, are there things that kind of like red flags now that you're like, oh, I learned this from this last?
Yeah, it's hard. It's really, I mean, you have to, yes and no. You have to take those lessons, but you also need to be really careful, because every deal, every investment is unique, and every investor is unique. And there's a lot of psychology in trying to understand the nuances of this and the balance of it, and making sure that, you know, that the fund in the right stage of its life. Because, you know, you might be thinking, oh, naively, we do this investment with this fund, and then the next round comes and they invest and they don't invest. You're like, well, what's going on? And it just turns out that they were at the end of their fund life and they couldn't invest. But if you'd known that at the time of investment, you might have chosen the other syndicate partner that was a bit more aligned. So all of these things, you know, happen. But you need to be really careful not to over-generalize, because otherwise you end up doing nothing. Because if you build up all of the things that could go wrong in an investment or in a process, and you just apply that as like, oh yeah, that happened before, I'm not going to do that again, then very quickly you won't ever do anything. Because, you know, so you have to make sure that because there's a lot of outliers. We're dealing with outliers all the time. It's just like a science experiment. So you have to recognize, like, the key thing is that a learning, you know, moment, which there are lots of them, and then what's the probability or the risk of it happening again, and how do I mitigate that? Because as a VC, that's basically what you're trying to do. You're trying to qualify where the risk is in an investment, between getting from here to something that's worth something more and getting some money back. And your job is to identify and ameliorate that risk as best you can. And if you don't feel like the risks you've identified are risks that you can ameliorate, like if it's not something that you can do anything about, then I wouldn't do it. But I think that's the key thing. And as a very active investor, so the impatient part, when you ask me how would I describe myself as an investor, impatient because you're trying to make sure that you know the world around you is running. But also, you know, it's about trying to make sure that you put in the work in, and that you do investments that you, as a team, can add value to. If there's nothing we can add value as a team, why we're not the right investor? So
there's a saying, of course, you are either a master of something or a jack of all trades. Why did you guys decide just to focus on quantum?
Well, I mean, it's a big enough area, to be honest, and I think, it's a bit like, so we're the reason why the fund exists was partly because of the Danish quantum strategy. So there was an inbuilt, kind of preemption towards the quantum focus. But when you think about it, if you started to do semiconductor investment alongside quantum, for example,
Right.
like, then you don't do all semiconductor investments because you'd be chasing those short returns. You'd be thinking about, and the asset class is very different. It's a very different asset class. Revenue could generate revenue or some IP that then becomes useful in a scalable product and so on and so forth. And quantum is very different. It's a totally different business model. We don't have scale, but there's an awful lot of opportunity to do deals, to get, to do M&A. There's a lot of revenue that's going to be coming very soon in terms of supply chain consolidation. But it's a very, very different asset class, and it needs to be treated like that. And we need to understand the industry intimately. It's very hard to understand semi as it is. Trying to be like, have the networking quantum that you need to understand who needs what, when, and how to fit that together and what to do, requires a deep expertise, and the people that we have in the team and around us, the network that we work with is a network of amazing people that know a lot about quantum. And, but by putting that together in one focused point, I think makes it more impactful than trying to spread ourselves across multiple areas. And there's going to be a lot of overlap into semi and into data centers and, things like that. But we try and stay more focused on that because, again, from a company point of view, if you've got two products, you've got like a modulator and you can use it for a data center or you can use it for quantum. Where are you going to spend your money?
Data centers.
Of course you are, because you could sell billions of them tomorrow.
Exactly.
So it's very difficult for us to like go in on a dual use thing like that because, we want the quantum part to get the focus. And it's a bit why the industry isn't further along, because we have the technology around us. It's just not accessible because we don't have the scale in which to make that economically attractive for the producers. But I think having that focus means that we can't wriggle away. We've got a 10 plus 2 plus 2 fund life with plenty of time. And there is an awful lot of flux in the market. So there's really good exit opportunities at the minute. So it makes it exciting from an investment point of view. And, with the expertise we've got, we can deploy that in a meaningful way, which adds value.
So, what does 55 North offer a quantum company that a generalist deep tech fund can't?
Well, I think it's that network of co-investors that understand and want to invest with us. We build a reputation through the people we work with. Our chairman was the first CEO of IonQ. My two general partners, one was at Microsoft and then AWS, and the other was an early engineer at IonQ. And across that history of them working for their entire careers in quantum, they have like a huge network. They know everybody in the space, and that's something that we can use to add value. I've got a lot of connections through the semiconductor industry from my last role in M Ventures, and that's helping us to bridge that gap to trying to bring some of those technologies together. There's a lot of interest in the industry as well. It's a lot of the same technology, and so I think, and then beyond that, it's like then access to solutions to products, what we're going to do with it. And most of my career I spent making molecules and trying to understand what physics they would produce. And so for me, it's that also. We worked awful lot on AI for materials, drug discovery, and I think quantum can have a huge impact on those things. So that's very exciting from a personal point of view, but also, something as a team that we can bring because we've been working in those markets for a long time and we know what the problems are and what business models work and what don't. And we have the connections in the industry to help to pull those ideas forward.
So your investment thesis spans 3 pillars, right? Computing, sensing, and communication. Call it network.
Yeah.
So when you're talking to a limited partner or a potential portfolio company, how do you frame this thesis?
Yeah, so we don't really think about it in those 3 verticals. I skin the cat differently. So we have to have the cat joke in. Kim comes out every time. So we think about it more from as like, you got the supply chain, the enabling technologies, right? This is the core foundational layer. And then in the middle, you have like things like for the full stack, the system. That could be the computer. It could also be a sensor or whatever. And on top of that, you have the application. What's the end use of it? And we're investing across all three of those areas, and at all different stages of the companies, all the way from pre-seed up to sort of Series B. And it's really, as I say, it's like the game is different these days. You're not trying to get the best 2-gate fidelity you can get. You're trying to think about how do I get 1 million qubits into a fridge. And so what can we do to help people on that journey? What are the technologies that people are going to need in order to be able to put 1 million qubits in the fridge? It's no good just starting a company trying to put 1 million qubits in the fridge. It's better to start thinking about, if everybody wants to do that, what are the things that we can find in common that we could build a company around that can generate revenue and can provide, make the supply chain easier and get to some scale, which makes the full stack layer less capital expensive and makes you more innovation in that layer too. And then on top of that, the sensing communications comes in the top bucket for me with the applications. So this is not necessarily a technology driven. It's more, there is a lot of technology in it, but it's driven more by product market fit. It's more about what business model can you bring to bear that makes that technology competitive.
Right.
Because sensors themselves, usually very cheap, very hard to, you've got to have lots of them to make money. But if you can think of an interesting business model in which to put a quantum sensor in, or an interesting solution that you can provide, then I think those things to me make more sense from an application point of view. And communication fits in there, as does things like, AI, augmentation, quantum simulations, things like this, which, maybe takes some early advantage of the existing systems that we have now, but is placing itself to find the clientele, the customers, the pull from the market, so that when we do have much larger quantum computers, that they can actually deliver real value quickly. And understanding how those business models work, I think, is most important.
So you've already made strategic investments in IQM,
Yep.
which is now IPO, I think.
SPACing,
yeah. We need to talk about SPACs. Culture and Monarch Quantum, right?
Yeah.
So what do those three companies tell us about how you think about portfolio construction across the quantum stack?
Yeah. So you said there were strategic investments. We're not strategic investor, but they are strategic to our thesis, effectively, right? So I just want to qualify, because we're a financial VC. We're not a strategic VC. But it just gives me an opportunity to clarify.
Yeah, sure. I was wondering whether you're playing offense or defense with them.
Yeah, we're always playing offense. And we've just announced this week as well, Kumata, which is a chemistry company, software company. They're based out of Delaware, I would say. The team are British, but they've founded the company's in Delaware. And they're doing like quantum compression algorithms that help you to, facilitate better calculations for chemistry and things like this. And so we've invested in like the full stack IQM, which is, a very mature asset. It's Europe's like, only mature full stack company, effectively, I would say. Maybe Continuum, but I don't know. It's
not. It's American.
Yeah, it's half American, mostly American.
It's mostly American.
They have most systems delivered, most revenue, for quantum companies. So I think, very interesting from an investment point of view, but also from a sovereign, point of view in terms of the European input there. Then Monarch is a US company, but they're doing assembly of components for optical technologies, for ion trap and neutral atom. And again, this is more about the supply chain maturation. So if you want to build a neutral atom computer with 1,000 qubits, you need, 2,000 optical systems. So it'd be better if somebody could make them reliably reproducible and so on. So that's a supply chain investment. Qtra also, if we want to see computers in every rack in a data center, we're going to need an awful lot of cooling. And, there might not be enough liquid helium or helium-3 around for us to be able to do that at scale. But I think Qtra is also really interesting because of the fact that they can cool very quickly. And it opens up another market, which is potentially in like testing and verification, things like this, which I think is also an interesting requirement of the industry as we mature the supply chain. If you want to make chiplets, you've got to test them. And so there's going to be an awful lot more, opportunity for doing more innovation at the cryogenic temperatures, I think. And then we have 2 more investments that we're announcing very soon. So we've invested across our full sort of like stack of from enabling technology through full stack to applications, and across all different stages from pre-seed to Series B. So it just kind of shows investors that we're getting quality deal flow, really great companies, and not just kind of out there science projects, but ones that actually have revenue, which is
different.
cool.
Yeah. You've you said that in terms of from your perspective over the last couple of, this yesterday with regards when we had the quantum computing infra summit.
Yeah.
A lot of was shit. So I want to understand from your side, where do you honestly think the quantum technology per se stands today relative to a framing of it's no longer a science experiment, but an actual useful aspect that one can use?
Yeah, okay, that's a good point. We're still a long way away. We're just transitioning between the ENIAC and the Fairchild integrated circuit, right?
Yeah.
We're somewhere in that, like, we have a few different transistors, if you want to call them that, right, in the qubits, and we're trying to integrate them into bigger systems. But we've got to go through the whole journey, that semiconductor went through as an industry. There's an awful long way to go. And as I said earlier on, at this stage, semiconductor didn't have it at the time when it was born. But at this stage, we don't have the scale to tap into the technologies, the most advanced technologies, which could take quantum forward an awful long way. So there's a journey to do to bridge there. But we're seeing systems which are deployed commercially. We're seeing sensors which are being, deployed to do GPS replacement, etc. The technology is maturing rapidly, and it's gone from a stage of, just making physics in labs, which I've done crazy experiments in labs that work, but there's no way you're ever going to do that in a reproducible way. But to start to build that whole system level understanding, to build the systems that work, we're well on that journey.
Okay.
But we have an awful long way to go to get to like 1 million qubits that we can usefully do some chemistry with. But that doesn't mean that there's not a lot of value to be created along the way. And a lot of opportunity for both, investors and for the companies involved. So I think, and the pace of development is exponentially increasing. We see news every week about how people are getting more efficient algorithms, and this whole like virtuous circle of developing the software and the hardware together will have to evolve as it did in semiconductor, and it will take time. We didn't just go from a transistor to AI data centers, right? And even like 10 years ago, we didn't have those hardware technologies which would allow us to do like the HBM and the high bandwidth interfaces that would allow us to do the sort of things that we're doing with inference these days, to put that amount of memory near compute to do those calculations. But you wouldn't have needed to do it if you. So it's this paradox that the industry is used to dealing with of, you need to have an application which shows scale, but you need to have to put the faith in to build the scale in order to get to the point where the application is useful. So there's a lot of analogies of how semiconductor evolved, but you can't just jump from here to 2 nanometer at TSMC. You have to go through the journey a little bit. And also that there's this like spillover. The quantum ecosystem has got an amazing lot of people, and there's a lot of people coming out of semiconductor now into it. But it started off with a lot of people from academic labs and things like that, which hadn't ever built anything at the scale that the semiconductor industry's built it. So I think things like this event that we've had this week, where we've had a little bit of smushing together of the two, helps to create that bit of visibility and a bit of excitement, because the semiconductor people can look at this and go, oh, we can help with that, right?
Yeah.
So
do you, let's say from an enabling infrastructure standpoint of it, right? Which is, of course, becoming more relevant than ever. But we need to address the bottlenecks, as you're making it nice and clear in quantum. What does that mean in practice? And what I'm trying to get at is like which parts in specific you have, like the quantum stack, cryogenics, control electronics, error correction, application layer. Which part represents the most interesting investment opportunities?
We're building a portfolio of like 20 odd companies, so they're all interesting, right? So I wouldn't pick one or the other. There's opportunities in every one of them, right? Yeah. But I think the biggest opportunity, and this is a bit we were talking a little bit earlier was around trying to figure out like where can we get where can we get scale in that? So where can we find the similarities, and then what needs to be proprietary in order to, like for your qubits, you want to be able to show like how do you do the there's some software part that you're going to need to own, but there could be a general layer which is kind of more cooperative.
Right.
And I think the same is in hardware. We don't have a semiconductor industry. There's not really many people that do the whole thing themselves. It's typically like there's people do design, there's people do this a substrate, an ASIC module, there's the manufacturing side, and then the packaging. So this has all been broken up into bits that make sense for that particular level of technology and scale. And we need to go through that process for semiconductor, but it's still very early for quantum. Sorry, but we're still very early because we don't know what the bits and pieces need to look like in order to build that supply chain out. There's some that are very clear, and that's I think where we can point to investments that we have or will make. Some are less certain, but I think all of those are important, and especially this link between algorithms and hardware. We don't even know what we can do with this stuff yet, because nobody's developed the algorithms. We're still seeing innovation in classical algorithms, even though we've had classical computers for 50, 60, 70 years, whatever. But that's what hurts me a little bit is when people go like, "Oh, how's quantum versus AI?" And I'm like, "Well, maybe you should be comparing it to the clock radio or the wire, the transistor radio, rather than AI at this stage, right?"
So on that, it's a good analogy. Like so, Owen, if you could share with us, like, let's say, let me bring the future right in front of us here with my palm. 1 million qubits. What can that do? What will it be able to do?
Well, you can probably do a lot with 1 million.
What's the first thing? What would be that number one thing?
The first thing I would do is I'd go and redo my PhD thesis and actually see whether some of those calculations I did with balls and sticks were actually sensible from a quantum perspective. But I've got a very different used to what a lot of people do. So I mean, 1 million qubits is a lot of qubits, but it's probably nowhere near what we need in order to make real. Because as soon as you've got 1 million qubits and you can calculate a molecule this big, you're going to want to calculate a molecule this big. So, or you're going to want to calculate millions of molecules that big because you want to make. So, I think there'll be an awful lot of innovation. We've seen the number of qubits you need to crack encryption come down and down and down. So, who knows what you can do with 1 million? By the time we get there, who knows what you can do with it? So,
what would be the threat of 1 million qubits?
Well, I guess it would put a lot of the encryption standards at risk, but then that's kind of easily solvable nowadays. You can use post-quantum cryptography, and there's solutions available that mathematically would make even that difficult, right? But I think I don't know. I don't know about the threats about it, because they're going to be pretty restricted anyway. I mean, if there is a threat, then you're probably going to not see the 1 million qubits. It's probably going to get dissipated somewhere.
So so why? I mean, Owen, then, so why? One of the key things that is kind of a theme that most quantum players are saying to the governments these days is a matter of national security.
Yeah, of course.
Why?
Yeah. Well, because a lot of the standards that we use in hardware is harder to change. It's a bit, but and I'm not an expert on this. You'd have to bring Helmut, my partner, on to talk about this. He can talk about this a lot more succinctly than I can. But I think there's always a threat when something can. People are worried about storing data for a long time and then decrypting that. I guess for national security that is an issue because the length of the official secrets is so long. So but it's not for like people probably like you and I. The things will be like is your bank going to get the encryption between your credit card and things like this, right? Can somebody spoof your credit card? But I think there are probably reasonably simple ways of doing that, but then it's more about the legacy stuff that's trapped and how much do you need to put into the system itself. Does every router need to have a chip in it to do QKD in order to have the layers of technology that you need? But as I said, I'm not an expert in this area, but I think there are a lot of national security threats. If bad actors are harvesting data and can detangle things, but it could be as simple as like, I don't know, hacking the encryption on your air conditioning and other things like this. I mean, there's all sorts of things, right? And it's going to take an awful long time. So well, if you go on AWS or one of the cloud providers, you probably can already have, post-quantum cryptography is probably already secure. But that's probably not the issue. It's probably the bit of the, the light switches in your house that you're not going to change and the controller in the nuclear power station.
Boom. That's scary. So 55 North is anchored in Copenhagen. You're backed by EIFO and Novo Holdings with an explicit mission to ensure Europe is a producer, not just a buyer of quantum technologies. So how real is Europe's competitive position in quantum right now?
I think it's very real. I mean, you look at the number of companies, and it never shows on graphs because you always do USA, and then you put all the different countries in there. But if you put all the European countries together, and even if you don't include the UK,
Yeah.
then it's a substantial number of companies, and there's a substantial amount of IP. There's been an awful lot of investment as well, and I also think that. So, I mean, if I go back to your question, the European right to play, I think, has been quite well established by years of government funding. The private financing is now increasing rapidly as well. And there are certain initiatives that are in some of the countries that I think are very well focused. And I think because we are not trying to spend money on building well, we are spending some money on it, but trying to build semiconductor manufacturing, etc., is going to be a much bigger challenge, right? To build what you need for quantum, you don't need the scale, you don't need the $1 billion of fabs, you need the right equipment in the right places to do the right job.
Yeah.
And because it's not been because it's not necessarily being produced for commercial value, you can get away with going in and doing small scale.
Yeah.
So I think there are some, opportunities there which could establish some technology base. But the challenge is going to be like, how do you get the growth capital in? How do you get the entrepreneurial spirit? Europeans, self included, typically, we don't have the role models around us as much as in the US to sort of for young scientists to want to become entrepreneurs.
Right.
Quantum's a bit unique in that respect. I think we're disproportionately represented versus the rest of deep tech in Europe. So I think quantum actually, if you look at it versus like many of the other deep tech areas, the quantum ecosystem, the professors, the CEOs of companies like PsiQuantum, Universal Quantum, etc., Cambridge Quantum, Oxford Dionics, like these are all really highly successful, highly valued companies or whatever, all coming out of like the UK. So, I think there is a huge talent there and huge opportunity. People need to see have permission to be successful, I think. And then growth capital, and then to keep the focus on it, right? And make sure that we can actually collaborate and combine those resources in a meaningful way.
So the question is, so what does it need to take for Europe to stay in the race against China and the US maybe as well?
Well, I think it's about, so China is a difficult one because we don't really know what's going on there. But, what we do know is there's an awful lot of investment and an awful lot of talent there. So, and, hugely innovative in terms of what they've achieved in semiconductors as well. So, that needs to be kept close eye on as things develop. US has got a huge amount of capital and deploys it, and deploys it well. Where I think Europe it can't compete on that scale, but it does have an awful lot of talent, and it does have an ability to focus onto things which are a different value. So I don't know, maybe it's about trying to find the right niche, right?
Yeah.
I mean, we need a few more like ASML type companies that are providing a key part of the supply chain and are critical in themselves. That would be part of, that would be making us part of the ecosystem and an integral part of that manufacturing. But yeah, we need more companies like that, I guess. It's unlikely that we would see, maybe not. Maybe we should be more ambitious, right?
Yeah.
The NVIDIA of Europe or something like.
Let's say, for example, the company that goes ahead again, just one, imagine there's an NVIDIA in quantum that happens in 5 years' time. What happens to the rest of quantum?
Well, I mean, as soon as there's a market, then people want to compete. So, I mean, nobody's sitting by and watching NVIDIA be successful. Everybody's trying to do their piece of trying to take a slice out of this huge market. So, I think that's great. I mean, however it works out, what we need is somebody to be really successful. If somebody's really successful, then everybody else has permission. And I think that's just what we need. And it creates, if there's a market, then it creates competition. So
I want to go a little bit personal with you a little bit, Owen. I want to know what's been the most difficult decision you've made in your career.
I mean,
be it as a scientist, R&D leader, or as an investor.
I think it's we touched on it earlier on. I mean, it's when you have to let go of something. It's really difficult being a scientist because you basically go into a topic. It's like, oh yeah, how does this work? Or like, how are we going to build this product? And you go ahead and you do it, and then it's difficult, and every day is hard, and all the nothing works. But you've got to have an awful lot of faith in getting to a point which is useful at the end of it, and you've no idea whether it's going to work or not. So, but then at some point you've got to say, like, it's not going to work, right? Or it might work, but even if it works, there's no market for it. Or just, we've changed direction. We're going to do this because this is more exciting. But when those, there's bridging this gap between, like, having a strategic decision at a management, a C-level to try and make a decision, and then telling a team that their project that they've been working on for the last 2 years is stopped, or, that the department is closing because we don't need R&D anymore, or, something like this. So, or at the individual level, like, we don't need this role anymore. Right. But so those are the hardest things to do, but you have to do them because it's better to do that and give people the opportunity, as long as you do it in the right way, to give people the opportunity to go and do something else than to continue doing something which doesn't make sense. So there are always hard decisions to make when you've got, if the job is meaningful enough, there's going to be hard decisions to make, and sometimes they're not the nicest ones. So, but you've just got to try and make sure that people are looked after.
So in your game now, what's the biggest red flag for you?
Well, when I'm looking at an investment?
Yeah.
Oh, just one. I mean, the team is the biggest one, but I mean, it's always like team dynamics. I mean, I've very rare. Well, once I remember I've been on a call, and we actually closed the call halfway through because the CEO was shouting at his team on, like, being really undermining them. And I was like, look, it doesn't matter what you do or how good you think it is, I can't work with somebody that's like this with the team. So that was a major red flag for me. But there are we didn't used to like, so when I was at Inventures, we came up with this framework. We didn't call it red flags. We had delighters and detractors, a bit like the Kano principle of product development. And every deal is completely unique. Every team is unique. Every technology, every market is unique. So trying to look at, like, a checklist is never helpful. And as I said about, you need to identify and then manage the risk. And so we looked at it as a game of, like, does this make the company look kind of good, or does it make them kind of look bad? And there's always shades of gray. But the biggest red flags are the ones where you build up with this picture of things you like about the company, things that you need, that could be improved. And you like to make that list go down over diligence and this list go up.
Yeah.
And if it goes the other way around, then that's a red flag.
Yeah, that was straightforward. So what would you say is the biggest green flag? Like, I'm sure you've had a couple where you just sat there and just went, oh, I need in.
Yeah, they're the ones that normally get shouted at by my team for being too excited, and then they try and never do they never want to do the deal. You just, like, you've been thinking about this technology forever, like, or a market, like, how is someone going to solve this problem? And then you meet a company that actually sits down and they just, like, tell you, we're going to do this. And you're like, oh my God, this is the company that's going to solve this problem.
Yeah.
We see when we're looking at neuromorphic computing, for example, we were talking about vector matrix multiplication, blah, blah. And then we sat down and we saw this presentation from a company, and it was exactly what we've just been talking about. And so I don't know if that's just serendipity or confirmation bias or whatever it is, right?
Well, that's it. I mean, which is good. You've led me to the next question. Is like, how much of your decision, from a percentage standpoint of view, i.e. 0 to 100%, is gut instincts?
Oh, well, 100%.
You go 100% gut instinct.
Yeah, but then you've got to do the work to validate. If your gut's not telling you, like, one of the other books that I would have mentioned was Head, Heart, and Guts. And this is a book, I can't remember the author, but it was about aligning, like, your logic, your, I don't know, faith, passion, belief, or whatever, and what your gut's saying. And your gut's normally, there's probably more brain cells in my gut the size anyway than there is in my head. So, like, but this makes the decisions for you. And then it's like, if you believe, like, if you go through if you can't make the logic, the assessment, the evaluation, diligence, whatever, match, then there's a dissonance between your head and your guts and your heart. Then it makes it very difficult to. That's the hardest thing to rationalize, right? So I think guts play an awful lot of role in it. And you can answer all these questions, and you can not put. There's something I can't quite put my finger on it, and that's when I've gone against that. It's normally been a lesson later on. I mean, you can't trust that because it's not.
Yeah. Here's one I ask everyone: is like, what's a misconception people outside the quantum community have about quantum investment, or what quantum investment actually involves?
Oh, I don't know. I've not been in quantum, like 100% quantum investment for that long. To me, it just it seems like any other investment.
Okay.
But it's just more complex because it's you you're not necessarily going to exit on a product. For most people that are going to exit, it's not going to be on a finished product.
Yeah.
So you're not going to the opportunity in most of the investments that we do to build revenue to get to a certain multiple and so on is not going to be there. Which is, if you're in a consumer or like a semiconductor product, you're going the challenge is to get to those sort of scales. So I don't know. I think it's not much different if you take away the detail. If you just look at what you're trying to do is build value by investing in companies and teams and technologies. And if you look at it like that and you think about it's just about how you define value and then making sure that you've got a path to exit. I think it's very similar. But there's an awful lot of hyperbole out there in the space because it's still an emerging space. And so for generalist investors, it can be difficult to pick between what could be quite a compelling pitch and what is a compelling technology or a fit to a market problem. So I'm being careful with my words there.
Yeah, I can hear it. But I mean, I don't know if you'd appreciate this analogy that I have for the work that you do,
Mhm.
but it reminds me of like X Factor. So like, you're like sat there and I would wonder, you get someone that thinks that they can sing like Michael Jackson, but they end up sounding like, I don't know, Johnny Travolta or something like that. Have you, I mean, you must have had some like hilarious or outrageous pitches.
There's been some interesting ones, for sure, but that's not unique to quantum. I
Okay.
mean, that's just VC in general.
Just VC in general?
Yeah.
What's the most craziest thing you've ever...
Oh, I don't want to. I
You
don't.
don't have to name them. Just
No, I don't.
name
But if I tell you what it is, then it is obvious.
Oh, is it? All right.
But there's been some interesting picture. But then for every one of those, like, people are still believing what they're doing a lot of the time, and I don't know. Who knows? Who might I judge by? So
But that's your job. You're judging, isn't it? That's what you say for a living.
yeah, I mean, but it's the same. There's a lots of investors invest in lots of companies that I wouldn't invest in, and a lot of the companies I invest in, other investors wouldn't invest in, because you've got to be able to bring value. It depends what you can bring value to.
Yeah.
So I look for something that I understand enough, or there's something that I can bring in with a network connection, or something that we can do to add value. Because otherwise, it's just dumb money, and that's not.
Yeah.
I don't want to be here for dumb money.
No. To wrap up the podcast, and thank you, Owen, for this insightful discussion. Like, what's the goal, man? I mean, what's the objective? Like, what's the big trophy for you?
Oh.
Like, if I say, Owen, 5 years time, and we're sat here in front of each other, what would you like to have?
Yeah, so I mean, I think we have a unique opportunity. This is, our anchor investors, IFO and Nova Holdings, have given us a unique opportunity to build something which has a meaningful impact on this industry. They've invested heavily in Denmark. We're trying to use that anchor to build out a much broader LP base, which we're still in the process of doing, to get to the 300 million target. But I mean, if in 5 years' time, I'd like to have successfully raised this fund, made some amazing investments that have actually contributed value to the industry as a whole, and use that to build our next fund. And I'm hoping that we can also start to think about, how we get more growth capital in Europe and how we get the exit market going a bit more as well, because I think this could be the area that we have an opportunity to do that in. So I'm very proud to be part of this industry at this moment, and I'm learning a lot as I go as well, because I'm still trying to make the transition myself from more on the semiconductor side.
Yeah.
But no, it's an amazing community, and I think there's very few technologies around at the minute which have the potential to have the impact that quantum does. And I had the benefit, the luck, the serendipity to be able to work in a tiny little bit of contributing to where we are with AI at the minute from some of the investments that we did previously, and just being part of that and understanding that and seeing then the impact it has is amazing. And if we can replicate even part of that with quantum, and I can scratch that little itch of being able to do some proper chemistry,
Happy days.
I'll be happy. Yeah.
Do you have any last comments for people watching this podcast?
Ooh, last comments for people watching the podcast. No, well, I think, keep an eye out for quantum. It's not, people worry that it's like this really complicated thing. I have experts that worry about the complicated stuff. In terms of an investment area, it's just the same as investing in any other area. Like, if you know what you're doing, I think it's a really exciting time to be part of this ecosystem. I really hope that we can do more with the semiconductor industry as well. So I know a lot of your listeners are probably coming more from the semiconductor side. I think there's an awful lot of value that knowledge and experience and producing world's most scalable technology can have a huge impact, because it's not just about that scale, it's about the precision and the accuracy and the attention to detail that the semiconductor industry and engineers have put in. And I think bringing some of that knowledge to help bring this physics up, which, let's be honest, I mean, we wouldn't have semiconductors without quantum theory anywhere.
Yeah.
Could be, providing a really interesting next opportunity for compute, which I think as part of there's other technologies as well, but there's very few that have the impact that quantum can have.
Owen, it's been a pleasure having you on the show.
Thank you very much.
Yeah, I would love to have you on the next podcast when one of your portfolios becomes again another IPO situation. We can dig in deeper on
that. Would be fantastic. Yeah, well, I look forward to that.
Definitely. Thanks for having me. Ladies and gentlemen, thank you for tuning in onto the Semiconductor Leadership Podcast with Dr. Owen Lozman. You can reach out to Owen right here on his LinkedIn profile. It should pop up. And also you can check out 55 North Ventures right here as well. It will pop up as well. So thank you for joining us. As they say, it takes a village to raise a chip, and it also takes a village to raise a podcast. So hit that subscribe button right there, hit it up. And I mean, look, quantum and semiconductors, there's a convergence happening without a doubt. And if you enjoyed the episode, like it, share it. And also, if there's any that stood out for you, hit it on that comment section. Thank you for joining again, and I look forward to seeing you at the next episode. Bye for now.